All right. Here we are. Good afternoon, everybody. It's a nice room. It's nice to be with you here this afternoon, the first day of Singapore FinTech Festival. It's an interesting topic that we have prepared for you, this panel. And I'm very pleased with the people that we managed to gather around on the panel today. I think it's both a very diverse set of views and also a very comprehensive one. So hopefully we'll make it interesting for you and you have some nuggets of insight to take away from the session today. So we first get started by just giving a little bit of context around the space of embedded. So embedded was something that was started to float around as an embedded finance. And embedded insurance became a bigger and more interesting thing, I would say around 3-4 years ago, with some of the innovation that happened in the space of Grab doing the embedded model, and then a few other models followed that. And over the years, it became a much bigger conversation in the insurance space because people realized that there is a very powerful new model of delivery for the insurance. So today we'll try to unpack this topic and see over this last 4 years, where have we gotten and what's really coming up next in the space for the insurance. So we get started maybe with the first question of what is that most impactful model that each of our panelists saw in the last 1 year. Maybe we'll start with Thomas first and we'll kind of go through.
So thanks, George, and yeah, it's great to see everyone in the room. It's surprising to see so many people interested in insurance. So that's a good sign, and hopefully we can keep you entertained. So when we talk about the embedded insurance, for those that are familiar with the industry, the concept is actually as old as selling travel insurance in the sales path. Naturally, over the years, it's started to be a much more evolved concept and more mainstream. It was joined by along with the evolution of the technology and the new type of the approach. For us as a Prudential, we have done many type of the partnership, but as well as distribution model, including the embedded insurance, starting from tackling the population of people that are in the most dire need of insurance in places like Ghana. We're partnering with telcos to distribute to informal economy protection, up to the examples where we work with the partners, including the banks, to distribute our products, like in case of UOB in Singapore, but as well as the other markets like Thailand and Vietnam, where we not only focus on the sales, but as well as service. But taking a lens of actually life and health insurance, what I think was the most impactful and most interesting what I have seen this year is actually what Amazon did this year with the bundling of the health cover in US with one medical. This is actually paving the way to completely new type of the models in terms of the medical protection. And on the back of it, there are some speculation that actually with the launch of the new generation of wearable devices, Apple actually going to follow through with the closed ecosystem providing protection, but as well as the monitoring through the devices. So the space is exciting. There's a lot of curveballs coming in from the non-traditional partners. So definitely the insurance industry and the large players like Prudential will have as well a lot of opportunities ahead of us.
Excellent. Okay, Roopa.
Thanks, Thomas and George, and good afternoon, everyone. I think Thomas have laid a very good background around where embedded has come in and how we have seen an evolution as well. I see it as a spectrum of, you see embedded insurance as, I kind of sometimes see it's like the drop shipping of e-commerce, where you are probably introducing, and it's an easy way to package and introduce insurance. It has impact from actually pushing people who are uninsured to underinsured segment, not fully yet. So, I mean, in terms of impact, when I think about it, on one side you see a lot of very micro embedded insurance, customer may or may not even know. To an extent, when you think about impact, I'll take very quickly 2 examples, which is one which is actually linked to the example that Thomas gave on Amazon, which is on health side, which I think is an interesting spectrum as we look. In Zurich, in Spain, what we have done is we collaborated with Google Fitbit. And we again, not just collaborated with them from a device point of view, but we also then worked with few service providers to actually enable health-related services. And together with that, now we are able to bundle that service as well as the device, and actually now that's being embedded into whether it's Amazon's and the Media Mart in the e-commerce space. But now what we have moved into is that we have also thought that phase 1 was just a simple generic health insurance embedding. But then in phase 2 and 3, what we have now introduced is one for maternity. So this is for expecting mothers and those who are young mothers, and the other one is for senior citizens. And what's that happened is that the other 2 pieces are actually don't even have insurance on your day 1. The customers just introduce the service. And I think that's probably what I found very impactful, is because 1, that's easier for the customer to resonate from a service point of view. And then 2, it also gives a lot of touch point and data, which is sometimes is missing in an embedded, pure embedded on one side when you think about a PA embedded. So I think that's one interesting area. It's also have enabled us to scale that embedded program with actually a lot of partners as well. So I think from an impact point of view, I feel that's an interesting one. And very quickly, in Indonesia, back in the region, we piloted with one of the micro insurance company, Blue Marble, and actually we were looking at a parametric product for coffee farmers. We did a pilot which was first offline, it wasn't digital as well, or wasn't embedded, but after we were able to get that, there's a noise that someone liked it. So after we were able to get that, now we are actually trying to embed that into the loans and mortgage. And I find it more impactful and relevant because generally you'll see a lot of mortgage embedded with a personal accident or a life coverage, but having actually a weather-related parametric product is very much linked to their mortgage, because if something happens because of weather and their production is impacted, they are not into bad debt again. So I think if you kind of relate from that perspective, it's about the relevancy of that embedded product. So just probably 2, and I think I'm sure there'll be more that we'll see, but it's 2 interesting examples from an impact point of view.
Yeah, I think that's interesting. So kind of hearing that there's a general move from super simple embedded micro products that, like, let's say for people here in Singapore, maybe they're familiar with the Grab insurance, where it's like a delay insurance and personal accident, to something that's a little bit more service, parametric, kind of a more innovative products. So from the investor standpoint, Melissa, maybe we can share what you are excited about, if there's anything that you saw that kind of really jumped at you as this, maybe like a part of the thesis of where the embedded is going.
Yeah, so I'll take I think embedded insurance is great for insurance companies because they get a different distribution channel. And I think it's great for large companies who can be the distributors for it. I think it's a terrible market for venture capitalists. And the reason being is because at the end of the day, you're going to enable the insurers who eventually can build the technology themselves. And then, whether it's Amazon or Grab or, any of the other platforms to distribute insurance, they're benefiting as well. But if you look at, the fact embedded insurance is not new. Zhong'an was one of the first ever to be embedded insurance. That hasn't really worked out that well. If you look also just at the number of companies, yes, they're building some core technology today, but the real question for a venture capitalist is, how can they scale? How can they really make money in the long term, and are they sustainable? And we've done so much work around embedded insurance for our own insurance LPs. And we always say to them, after these decks that we do, it's a great market for you. It's not a great market for a venture capitalist to make money for the long term. And so we watch it, we look at it. I'm amazed at all the products that get embedded, even cyber insurance getting embedded in different things. And it's great to see. But for ourselves, we have to look at other parts of the market than just actually embedded enablers.
Okay, that's a good point.
Jonathan may completely disagree with me.
So Jonathan, from Ping An's perspective, I think Ping An is one of the biggest insurers, if not the biggest insurer in the world. We're very happy that you joined this panel today instead of going to APAC probably in US. But from a perspective of that lens of both the Voyager fund and in Ping An, where do you see that embedded space?
Well, firstly, thank you, George, and the Singapore FinTech Festival for including Ping An and for inviting me to join. We always like to be part of these types of events and share our perspective and experience. I think where I sit, it's probably, I kind of straddle the operator-investor divide on this panel because we're a pretty active investor. I broadly agree with Melissa's comments. Most of the, let's call them the kind of MGA type of players who are trying to digitally embed insurance products, whether or not they're an underwriter or whether they're reinsuring their risk or simply working with partner companies, we tend to find those guys getting pretty squeezed between the manufacturer and the distribution provider, especially, of course, if they're relying on platforms like Meta or Alibaba, Tencent, Baidu, etc. So I broadly agree that most of the experience of specialist plays in trying to embed insurance in the mobile experience through some other channel has been pretty disappointing financially. I think I would distinguish, I think we're still at an evolving stage in this whole space. I would distinguish, and look, all of us in this room probably constantly find ourselves, every time you book an airline ticket, every time you basically do anything, you take a Grab share. I don't normally take Grab because I don't live in Singapore, but I'm quite impressed with their platform now. But half the time they ask me, do you want insurance? Well, no. Why would I want insurance? I want a taxi. If you crash it, it's your problem, not mine, etc. I would distinguish between what I would call dumb embedded and smart embedded. One thing that we've done that's pretty interesting at Ping An Bank, we have 110 million customers now just on the bank side, and we're the number 2 credit card issuer in the country. That means we do more card volume than Citigroup does globally or Amex does globally for the scale of this market. But we've got this very interesting data platform. We've created 1,000+ customer profiles just to keep it manageable. And then we've created this layer on top of those profiles that says every time something happens to a customer or a customer triggers something where we think it would be relevant to communicate with that customer or offer, we try to create something that is interesting and relevant. And then we use learning algorithms to see whether the customer was receptive to that message. Firstly, did they even look at it or read it? And secondly, did they do anything about it? And where we have active feedback loops, what was the feedback? So we can constantly refine the content that we're giving to each of our segments based on the behavior and the circumstance of each customer. So this has taken us now 7 or 8 years to build. It's really quite a sophisticated, it's like, think of CRM, but an entirely digital CRM. And of course, in China banking, you can take a gun and shoot it in a bank branch. You won't hit anybody. The branches are all empty. So our business is basically 100% digital. So this is where we have the chance. We have a very broad palette of insurance offerings. We offer travel insurance, flight delay, all kinds of health insurance, life insurance, auto insurance, etc. And finding the right moment of context and the right relevance, that is the real science here. And that's where this begins to become very, very exciting. So I think if you're a distributor, if you've got a distribution platform, but you don't have a very comprehensive view and a lot of data sources around a customer, it's very hard to be relevant at that moment when it actually matters. Auto insurance, it matters when the renewal's coming. So you have to know exactly what their premium is on their credit card or their debit card or their current account, direct debit. You have to know exactly when it is. You have to be able to calculate where it is. You need to know what company it is. Then you need to know what can I offer that's going to be attractive and relevant at that exact moment. That is when it's relevant. Don't talk to me 6 months ago or in 6 months' time. That is a waste of breath. So that type of saliency is so important. And for us, insurance happens to be a core product, but the insurance content is just one of many, many things that we're interacting with our customers about. It could be, you know what, the market moved because of inflation expectations last night. What does this mean for you and your specific portfolio? Does it warrant a conversation with a investment advisor, or would you like to interact with one of our AI interactive chatbots that can give you some insight around that? That's just as important to us as selling the next insurance product. So I think that's where this whole thing moves from basically pretty dumb product placement to, you know, very focused needs and context based.
That's super interesting.
George,
I guess.
Can I just pick up on one
Yeah,
thing that Jonathan said, which is the difference between static and dynamic. So if you think about dynamic, and just take connected cars as an example, with EVs coming in, there's really no reason why you can't separate it out and insure the asset separately from the driver, and actually have you know, the insurance payments be embedded for that driver at that particular time. I mean, anyone who has children who gets charged a lot when they're under the age of 25, if that person's driving, then they're charged at that point in time for more. Yep. And it's embedded in the car by either a credit card or some other way. But that's dynamic insurance. And for that, you know, there's an opportunity because you need real-time data, you know, end to end. You can't be, I think Jonathan's exactly right, and where he articulated, of course, much better than I did, which is MGAs have really, for VCs, just so many of them, and static insurance that way. But there'll be a whole new generation of dynamic that could be interesting from an investment perspective.
Okay, that's very interesting, and I think that point about embedded moving from like, here is a static product, it's going to always live here and it's going to look exactly the same for everybody, to this kind of a more of a smarter segmentation. I think it is an interesting progression of the model, and I think maybe China in some ways is probably a couple of years ahead of the rest of the markets, because even on the embedded space, like the return shipping products and everything started probably 5-6 years and a few years ahead of the rest. So maybe we kind of pick up on that, both a smart insurance and kind of a new innovative insurance products. And if we were to take a quick glance in terms of where you think the potential for this embedded model is, because, you know, right now 98% of the insurance is still not embedded and is still done in a, you know, intermediated way, whether it's a broker, banker, or agent that is selling the insurance kind of being there. And then the embedded seems to be right now growing quite fast, but where is that ceiling for the embedded space, whether this is the kind of a smart embedded or the more innovative products? Where do you think that is? Maybe we start the opposite way, so we go with Jonathan first, since you kind of picked up on that theme.
Well, I think one interesting thing, again, at Ping An that might be helpful to share with people is, you know, we talk a lot about embedding financial services into other channels and other value propositions. I think one thing we're trying to do is embed services into our financial products. Aged care is a rapidly emerging space in China, given the pace at which the demographic is shifting to, you know, an over 60s rich population, let's call it that. And, you know, the aged care infrastructure is still pretty elementary. So we're creating some very interesting, just at the high end, value propositions around the right to access very high quality luxury or, you know, near to luxury long-term care accommodation and support embedded into a product that can actually fund that support over the rest of your life. So let's say, just for argument's sake, you put $1 million or $2 million into this, effectively an annuity, then the right to access a very high quality facility, hotel-like suite facility with full medical care that is going to grade to the needs that you have over the remaining decades of your life. And it can be basically paid for up front pretty much out of the earning stream from that annuity, as an example. A second example that I think Ping An has done well, as the largest car insurer in the world, we've got this thing called the Good Driver app. And it's available to customers and non-customers. It has about 40 or 50 applets inside it, which are basically value-added capabilities that give you access to all kinds of things. It could be access to service and parts. It could be access to a driver's score based on our telematics. It could be a deal on the new car through our auto home platform, etc. And so it's a platform that really has a very rich offering. It's centered around our auto insurance relationships. Interestingly, we have our best-selling credit card is our auto-linked credit card as well. And what we've found is just the more services we can layer together in an intelligent way that meet the client's needs, the longer the relationship is, the less likely they are to switch, the lower risk they are, and the better the lifetime profitability of the relationship. Most importantly, the more satisfied the customer is. So I think, if we think of this as a bi-directional kind of set of opportunities, I think many companies will find that a very rich terrain to work on.
So it sounds like, in a way, the ceiling is much higher if we think about it in a more comprehensive way, rather than just saying like, okay, things that are statically embedded or even smartly embedded. It's like the whole proposition basically reverses a little bit of the kind of the insurance being the focal point, to services, and the whole bundle being that kind of embedded bundle.
Yeah, and I think a very important point is, if you're embedding through another distribution channel, well, that channel owns your customer. In our case, what we want are customers where we are the center of the relationship, and the loyalty is to the value proposition and the brand that we have brought together.
Got it. Melissa?
Well, I mean, Ping An's incredibly impressive. I'm sitting here listening to Jonathan and thinking, oh my God, we can't even operate within our own company or personally. You can't get healthcare insurance from the same person who does your auto or an umbrella policy. From a consumer's perspective, again, from an investment perspective, I think embedded and what Jonathan was describing makes complete sense for insurance companies. It's virtually impossible to build that end-to-end for a startup MGA, right? So we just don't see any opportunity there. But I think if you just ask the broader question, where are we in the life cycle of integrated financial services, including insurance and other aspects, we're just very early. And so I think there's just, the next 20 years, we will see a lot of changes. I think insurance is incredibly hard to disrupt unless you control end-to-end for a startup. And that's sort of what we've learned over the last 3 years. And so I just think from the development of the insurance industry, this is really early days, and there's just a long way to go.
Got it. Roopa?
Yeah, no, I think I'll echo the thoughts, because I think what's happened, the most of the embedded programs that exist, they can take you from 0 to 10, but they're not able to scale from 10 to 100. And the reason is also because a lot of time, as both Melissa and Jonathan have touched, one, what happens is that the distributor has overall control of customer, which is not the end problem. The problem is a lot of the programs don't give much connectivity to the customer, and what that happens is either they are not even aware of something that they have, that means there is no value, and that is a one-time embedding you have done. Sure, you'll have millions of customers and they will embed and you can get the one-time revenue. It's not scalable. So which is where I think majority of the programs today in the market, and I think that's the evolution it will do, we'll probably should see, that it will start shifting into more mature models, which are service-oriented, which actually creates more touch points. So your embedded has to be long-term in thinking. I think it's a lot, and it's fine. I think it's just a phase of how this has evolved in insurance, that I think now it will push, because everyone is doing same thing as well in the industry. So I think there is a need for differentiation. There's a need to move from 10 to 100, and for that we need to kind of be dynamic, but we also need to make sure that customer is aware and engaging with that embedded insurance. So I think, do we have all the touch points and triggers being exploited and actually being offered? No. But also on the other side, that's not the end game. It will only evolve from here, is that it has a way of actually engaging the customers and actually moving them in that journey. Because as I kind of always feel is that it can bring someone who is uninsured to an underinsured, but is this enough for them as well? It's not the answer for overall from a protection gap point of view as well. So I think there's a lot in this space that I think we should fundamentally see, and as an insurer and as I think our responsibility, it definitely is that we evaluate the customer value and don't have generic offerings on the touch points. So I think that's probably where I see this evolving.
Okay, thank you for that. Thomas?
I think we are in a very important point when we talk about the embedded insurance, because traditionally, whenever there was someone mentioned embedded insurance, it was always only about sales. It was about the distribution, basically. How can I push the product through the partner channel? And even you can see in the conversation that's happening, it's the conversations within the industry are shifting towards how we can focus more on embedded services and provide not only the transactional purchase, but as well as the service. And naturally for other markets than outside of China, where naturally the structure of the market itself and the level of consolidation is different than many other markets, not only in US, Europe, but as well in Asia, there's an opportunity to replicate and roll out similar programs through especially banker partnerships, because that's the two components coming together, the financial component as well as the insurance. And this is the space that definitely we as Prudential, we're investing and focusing, because the combination of all the ingredients of the data, touch points, frequency, relevancy of the messaging, but as well as advanced capabilities, especially around machine learning, come into play, and working well with the bank partner and figure out how to actually collaborate to bring it into fruition and deliver a value that is timely and creates opportunity for customer to satisfy the need, and in the end provides something that is required to tackle the underinsurance, but as well as the protection gap, but as well as provide the perception that actually I can as well service. Because one of the biggest barriers for growth of embedded insurance is actually the fact that in the past it was always focused on sales. Right now, with more services being developed and pushed through the channel, through the self-service capabilities, the people actually, when they purchase, they gain more trust. That actually creates creates a momentum that allows the growth of the market and broader adoption by the customer, as well as trust in the product and ability to access the service at the time of need.
Okay, that's I think it's a good point. And we had the third question that I think was thinking about how to think about the space of embedded and versus like the omni-channel and kind of the AI, but I think we've kind of touched many of the parts of that question already in terms of providing that kind of a smart solution, services embedded solution. So I'm actually keen to jump maybe ahead with the questions. I know we have about 12 minutes left. So maybe we'll just go through the question, and for the questions, we'll probably just do like one-to-one, so we don't need to all contribute to it. So there was one interesting question about, for Ping An, for Jonathan, how do you think the lack of or presence of strict regulation has accelerated Ping An's use of data in insurance?
It's interesting. I think the China landscape is frequently misunderstood, and within the regulated financial institution sector, anybody that falls under historically the aegis of the CBIRC and now the new comprehensive financial regulator, has always been subject to extremely strict data privacy rules. And it's interesting, I spent 18 years at Citigroup, and I can assure you that we were subject globally to extremely strict data privacy rules. Coming to China, it's in some ways even more strict. And so, for example, between entities, we're not allowed to share a health insurance client's data with our credit card business for underwriting, or an auto insurance client's data with our life insurance business, etc. We're just simply not allowed to do that. The walls are extremely firm. What we do is we've tried to create a kind of a anonymized profile model. It's a bit like Google, You know, when you go into Google, you do a search for you want a hotel in Kyoto, then the next time you're reading your New York Times app, suddenly you see there's this ad from Hilton in Kyoto. Where did that come from? Well, the New York Times doesn't know that you were searching Google. Hilton doesn't know you were searching Google. And Google doesn't know that this ad is showing up in the New York Times. And they've created this way where all parties can benefit from the fact that, your data is in an abstracted way being shared anonymously, and you're able to get relevance. So we have an abstracted model like that. We have a kind of publisher and advertiser model internally, where the advertisers are the products and the publishers are effectively the people that own the different online platforms that we have, which are our distribution channels now. So it's kind of like an internal marketplace using this kind of anonymization process to share data. So that's how we deal with it within our group, at a pretty sizable scale. But I think the rest of the China landscape is evolving quickly. Obviously, anyone that has focused on China would be aware of the privacy ordinances and rules that have been pretty rigorously enforced over the last 5 years. It is interesting that the ordinances that have been in place for more than a decade actually mostly come from the EU. They're extremely consistent. The issue outside of the financial sector has been the progressive enforcement over the last 5 or so years.
Cool, super interesting. Thank you for sharing that. Okay, the next question is for Roopa and Thomas. Can insurtech companies compete with bigger traditional insurance players like Prudential and Zurich, who are coming into the stage?
I think I think what we are seeing already in the market is that it's about collaboration. There is no denying fact that I think there is a larger pie, and then everyone has a part to play, right? So I kind of see it from that point of view, that it's the pie is big enough, and we're still looking at an insurance penetration which is so low in this part of the world and in many other economies. So I don't see that that's, first of all, fundamentally a very competing space, that it's all full, right? Having said that, I feel that there is, when I say collaboration, there are various ways in how we are seeing collaboration between, let's say, the big organizations like Prudential and Zurich. On the other hand, with insurtechs is 2 examples. One, as a big organization, global footprint, we have a lot of distribution, existing distribution, which probably actually there is a need for that to be tapped into new digital channels. Where insurtechs can come into play is that we can collaborate for a go-to-market which is quicker, something that exists and that can be tapped. So there's collaboration that can happen over there. Similarly, a lot of insurtechs, I feel, generally tend to be very monoline. They probably are in 1 or 2 categories, and that's one gives them specialist capability, but on the other side is also restrictive. And I think that's kind of again a collaboration that can come, is that the insurers like us can come in from one, increasing the breadth. So I think there's a lot of collaboration. In the end, it's about, can they compete? Sure, they have been in this space. I think it's both are doing different, I feel, different role. One is trying to push the boundaries in terms of introducing, and I think it is a responsibility for us, insurers like us, to scale this. So I think that's why I think for collaboration, for scaling this, that's kind of where I see the 2 coming in together. Sure, we are competing in some spaces, and we'll continue to, and that's probably the dynamics of the market. I'll not lie and say that, oh no, we don't compete, right? We do compete, but I do see there are enough potential opportunities to collaborate as well.
Got it. Okay, maybe up to you if you want to.
Just one sentence. The protection gap is over $1 trillion globally, so it's enough opportunity across for everyone to actually grow and find the right areas. But naturally, it's all about creating value across when it comes to the collaboration. And the second one, you just need to be conscious as an insurtech that technology is becoming commoditized with time, so that's clear. So you need to focus how you can position yourself to maintain your position in terms of competition, but as well as create mutual and self-reinforcing business model for both parties.
All right, sweet. Question for Melissa. So I think the question is, can you shed more light on the MGA opportunities and challenges? And maybe just additional question to that is there anything in the insurtech space that you're excited? I know that you're closed your upcoming fund, so there is this kind of an opportunity space, whether it's MGA or anything.
So MGA is a catch-all for, basically a startup company that thinks they maybe can underwrite better, and they're given the pen by an insurer to go with some capacity. And what the people have to realize is you're just a sales agent, right? And how are you going to scale that business? Eventually, you're going to have to get a lot of capacity. Most of the MGAs that have been funded by VCs will fail, probably 95%, because the question really is, what's the exit? How big do you have to be? What is an insurer going to pay if you're just another distribution channel? I say that with however. The area that we continue to be interested in is novel risks and new risks, and perhaps risks that existing insurers cannot use traditional technology, meaning actuarial tables of the past, to underwrite. And one, happens to be, let's face it, with cyber. And there's different schools of thought on cyber. I know Zurich believes in containing leakage as an example versus really preventing it. Now, these companies will start out as MGAs, right? And they'll have a partnership. But at some point, they have to go directly to the reinsurers, or actually maybe what we'll see eventually. Unfortunately, Vesttoo was a complete disaster and will set the industry back on being able to go to the ILS market to really secure your own capacity from the capital markets. So I think, again, MGA is this catch-all phrase. Maybe it's a nice way to start, unless you're really in a novel risk area or you can scale to be multi-billion dollars, you're just not relevant. And what happens with the reinsurers is that when interest rates are increasing and they're making so much money, what do they need to bother with 10 or 20 or 30 million of capacity to a startup if it's in an area that's really long-term, not on their roadmap, or not a novel risk they're looking to underwrite?
Yeah, if I actually just add to, I think that question and the one we were answering before, right, on competing with insurers like us, I think we were discussing off stage as well, that it depends on what the insurtech model is, whether it's about a technology and with a view that eventually the capacity will be always provided by the insurer or the claims, etc. Then it becomes commoditized very quickly, versus you want to actually have an ambition that actually eventually I want to be an insurer, or you want to go down the route of I want to be sold by the VC. And actually, so I think it depends on which segment, and I think the answer on both from a VC side or insurer point of view and how we look at it will probably also differ in how we engage with different players in the market.
Yeah, I think we've covered a lot of territory in the last 38 minutes, and I think the perspectives on the stage has been very, very interesting. I've personally learned quite a few new things as well from you guys. So I appreciate you sharing that. I think it's very clear that the embedded space that started 4 years ago is changing, has a lot of potential still to grow, especially as you start to think about like the Jonathan's perspective about smart insurance, how Ping An is doing a lot of stuff about combining data, creating new innovative services that get bundled into it, in addition to the innovative products like cyber, for example. So it feels like this opportunity space for embedded is expanding, and in some ways maybe the better way to think about it is the space that sits outside of the traditional insurance. So it's not just about trying to take a life insurance product or health insurance product and trying to plug it into somewhere where it could potentially belong, but it's really looking at these new areas of opportunities, looking about people who are retiring, looking at people who are getting hacked or companies that are getting hacked, and thinking about that proposition as embedding maybe this particular different parts of it together. So I think it is a very interesting way to think about, and as we think about our own life and the things that we do in both companies and people, I think you can see that there is a tremendous potential coming down. So first of all, big thank you for all of you guys to join us this afternoon. I know it's been, I think, quite quite hard to kind of get people to process it. It's an insurance topic. I know some of you are familiar with it, some of it's quite new. So it is very good that I think we managed to have a good set of perspectives on the stage. I'd like to thank you. So a quick round of applause for everybody who joined us. And then the last thing I want to say is somewhat unrelated. Is I want to give a quick plug for my book. So I'm releasing my book that's called Power of Play. I'm going to have a signing later on behind here on the executive lounge at the expo Hall 3. It is something that has been a big topic for me because having been in insurance, I haven't seen this innovation space really evolve very rapidly. One of the things that really became very clear to me is that the people are the key enabler, and how to get people motivated is something that is need to be rethought in the way that we work. So I wrote this book starting from last year's SFF and launching today. So hopefully some of you can come and join me just down the hall at the Executive Lounge Hall 3. So thank you.